Good morning, everyone, and thank you for joining us on Morning Markets. Today, we'll look back at what's been happening in asset markets over the past number of days and also look to what we can expect from the week ahead. So just looking back at how asset markets have performed, and you will have noticed through the ticker that's on the screen and over the past number of days that both equity and bond markets have been delivering negative returns. And that's despite what we've been discussing at times around more positive economic data from the US in particular. And I think therein is the rub at the moment. This better than expected data is causing a reassessment of what that means for inflation and also what it means for interest rates. And for those that have been following morning markets over the past number of months, indeed, you'll think that that takes us back to the discussion through 2022. And really, we are again talking about the interaction between inflation and interest rates. Really, at this point in time, data from the US on Friday indicated that inflation still remains a challenge. It's maybe not coming down as fast as had been hoped for. And if we just put some numbers around that, looking at the core PCE inflation, probably the Fed's more preferred measure of that, we're seeing that accelerate a little bit month on month. And that just raises concern about where interest rates may have to increase to, particularly in terms of that peak interest rate. So if we just cast our mind back, this time last year we had a US interest rate of 0.5%. Today we're at 4.75. Expectations had been that we would see a peak around 5%. Over the last couple of weeks, that's certainly moved higher, and we're probably closer to 5.5%. And that's really what's causing this reassessment in asset markets at this point in time, and something that we'll certainly have to watch over the coming weeks. And in particular, when we look to the week ahead, it's quite important that we'll have some economic data, durable goods order, which might give us an insight into whether the ongoing strength that we've seen in the January and February data is sustained, or whether there's a bit of a change there. I think more importantly, however, will be that which we hear from Federal Reserve governors over the course of the week, as people will scrutinise what they're saying in terms of expectations for interest rate increases, but also any commentary that they have around peak interest rates. Also this week, we'll have PMI data from China at the beginning of the month, and that'll be important to get an indication as to how the Chinese economy is performing as it has reopened post their COVID measure changes. I'll leave it there for today. Please do join us again tomorrow. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.